Hey guys, welcome to another video. Money Max here again, back with another video. So today we're going to go through day number 8 of our trading 10K challenge to see where we are in the account, what's going on in real time. And then also we're going to have a look at the news, the aftermath of the FOMC news, find out what's happened, what's going on. So I hope you guys enjoyed this video. Make sure you listen to every part of it and enjoy. Okay, so guys, starting off with what we had yesterday, I'm just going to scroll up here so that you guys can see this. So yesterday we had FOMC news, which I believe is the most important news we've had for the entire week. All right, it's very interesting where we are at the moment when it comes to price action, price in general, how central banks are behaving, and what are the necessary steps that we need to take in order for us to be able to be on the right side of the market. Now, as a technical trader, it's very important for you to have fundamental knowledge. And for those of you who know me personally, you know that I do not like to just approach the market just from a technical standpoint to certain degrees, because even though you're understanding how to understand the algorithm of the market when you're trading, the algorithm of the market, coupled with having the understanding of what's going on behind the scenes, which causes the algorithm to turn in the favor of institutions and central banks and whatnot, in terms of price action, you would like to know that information as early as possible, because it's going to give you a healthy balance. And I'll show you what I mean today. But anyway, before anything, let's have a look at what's going on. We had FOMC news yesterday. Let's have a look at what's going on with the price action following on. Switch over here for you. Okay, guys. So as you can see, I'm back in USD JPY again. It's been a very interesting time with this pair, but the FOMC news provided an entry for us, which is what I wanted. And now we're in the short at the moment, and we're still on our way down. There's still quite a few pips to go. And I'll quickly run through this trade and get rid of these things for you here. So with Hugo's Way, I really do love their platform so much. Shout out to them. You can trade crypto and you can trade Forex. So it's a very nice platform. So I am trading crypto and I am trading Forex on here. And I will take this account to 10K for sure. And when we do, as I said, there'll be a giveaway. So make sure you keep following, keep sharing, keep liking. And yeah. So USD JPY was a very simple entry. Again, using the algorithm of the market to understand how the price action works. We're looking for an entry within this area here. Most of the orders from sell traders and buy traders are around this region right here. Now, this line isn't a support and resistance level. It's just a high of the previous day's high, so I can assess the price. Now, with me, guys, if you notice on my charts, I don't have any indicators. The only indicator you're ever going to see me use is what I call the risk management indicator, which is this thing here. And you turn it on by pressing S. And I just use it to make sure that I keep my risk managed, okay, so that I can have the type stop losses. It tells me the lot size I need, how much margin it'll require, and etc. So this is the only tool that I use and that my students in the academy use as well. I don't use any whatsoever. And the reason I simply don't is because, having the background I do and having the blessing of to be around certain levels of traders from institutional levels, and that from that degree, you realize that indicators are actually a load of rubbish, and that what really moves the market, with those indicators, don't get me wrong, moving averages do have a place and they are useful, but anything above that really and truly is a waste of time and based on data models that are defunct. One thing I would like to say now, for those of you who follow me or listen to me, I'm sure you know what I'm talking about, but when it comes to the algorithm of the market, the algorithm that controls the order books for the Forex market and other markets too, okay, has the capabilities of machine learning, okay, or complex linear regression, which means that these algorithms that control the market have the ability to self-learn and to self-improve. And what are they self-improving on? To stop out more traders in as many ways as possible. Now, the easiest way for them to do that is that if there's a mass way to trade, or there's a main way that everybody trades, like you heard me say the other day about Mark Cuban, that if everybody is going one way, the wisest thing is for you to go the other way. Okay, start timing. If someone does this, if everybody's doing the same business, everybody's selling the same kind of products, it's time to do something new and run the opposite way. So this is exactly what it is when it comes to the Forex market. In order for the price action to favor you, you need to understand this concept. So you, as you know, many traders all trade the same way. You guys trade hopefully differently, but I don't know what you do because I can't see you. Anyway, many traders trade the same way, follow the same YouTube videos, trade the same patterns. And so it's easy for the algorithm of the market to assess that, develop resistance to it. You can think of it as a virus or something that, some sort of virus that has a resistance. And every time there's a so-called cure, the plasmid updates itself and it becomes more resistant. So it's the same thing in the market. So if you want to understand how to trade on the Forex market and be successful, they need to understand the money behind the market and where the money is in the market so that you can be able to trade correctly. Okay. So looking at USD JPY, this is exactly what we've done so far. Now I might close out. I'm not really too fast with this account. Of course, there is a take profit for every trade, but I'm having fun with this as well. Let my hair down a bit and just do things a bit differently here. If I go down to the M5 here, I'm still in this trade. We've just had the price drop very strongly. So with the US news, what did we have? Let's look at the timing of the price. So we had a very good, this pullback here, which is what I wanted to see. All right. We had this drop at 12 o'clock. So when the US liquidity poured in for us in the UK, 12 GMT, we had a very strong pullback. And you can see right here, this candle, which is 9 o'clock, which means 7, we had a very strong pullback as a return. Now, very often when it comes to news, the market would use the news or use the events around the news to basically provide entries. I told you last time that from an institutional point of view, many institutions don't trade the news the same way that retail traders do. Like some retail traders would have had a sell and a buy maybe 1 minute before the news to try to straddle the market. And to a degree, it works. I'm not trying to bash you. I'm just being honest. But institutions rather try to use these news events to get out of positions to take profit. Okay. Or maybe to get an entry, who knows? Okay. But mainly to get out. And so for that reason, you want to make sure that you keep in your mind that important factor before you go and approach the market. So for me, I was looking for the price to be done with that movement and then get in. Okay, now I got in a kind of late here. I had initial entry over here, then the price pushed a bit higher and I saw the opportunity to grab a bit more. So I decided to do so. Now I can drag my stops to even. So I thought I would save my dragging my stops to even here. Now I don't want my portfolio to be too exposed, even though we're having a bit of fun here. Make sure that we drag our stops to even when necessary. So we'll just put that up here. All right. So stops to even. Did I do it right? There we go. Or maybe I did it wrong. Let's see. All right, but my drags, I'm trying to drag my stops to even. I don't know if it's a conspiracy theory that the price is not trying to drag my stops to even. All right, I'll do it this way. All right, it's not letting me do it, but I will do it in a minute. It's all right. But let's just have a look at what's going on with the price anyway, and let's see what else we can get going forward. All right, so CAD CHF. Now the price has been a bit shaky, as you could see that I didn't personally get back in because I didn't trust the price anymore. And we've just had the price wick even lower again. And I think the price, as I said to you, the only way I was going to get into this is the price broke back above this M15 or /M30 supply zone, which it hasn't. So since for that reason, I didn't give any more trade calls. We took our profit where we took it and we just left it alone. All right, because sometimes, as I said, guys, intermediate targets are better than no profit at all. And so sometimes you want to make sure you get profit from the market instead of trying to hold on, you know, as I call it, the Rottweiler grip onto the market when it's not necessary. You just want to keep yourself in the profit zone, okay? Now, all of a sudden, my stop loss thingy has come up. So let me quickly fix that. So let's come back here, drag the stop loss here. Bam. I'll just make it 46p. Let's let that load up. Now today on this video, if things look a little bit slow, it's because in the background, I have a lot of things running and I also have my theta edge node. I don't know, whoever has theta edge, if you don't know what that is, I'll be doing a video on that. It's basically free fuel, excuse me, free to fuel. Oh my God, free theta fuel. There we go. Got it now. For the foreseeable future. So I've just been using one of my laptops as or this laptop I'm speaking on right now, as a node, which has been fantastic to do. I've already earned some. If you want to know about the theta node, drop in the comments, let me know, and I'll make a video on it. Okay, so Euro TRY is another trade I've been looking at. Now the price is still bouncing around, not in the region that I want just yet. I'm just hanging in there. But as I said to you, the Euro TRY trade, I'm still going for it. I'm going off of the looking at the price action and also fundamentals that I have. And we will discuss this in more detail. I'm not ready to enter this yet, so I'm just going to hold on here. Now, let's see what else the price did. Now, based on pair correlation, what I have done, okay, is that I did take Euro USD. Now, there was an algorithmic level that the price dropped to, and it is right near this red line here. So I decided to take the advantage of the price action that we had when we had this major short happen. So here's what we had on Euro USD. So we had a great short, and then the price spiked here, which is what I want. Once I saw this spike, then I was in for an entry. Now, I don't usually enter Euro USD. I don't think I've probably only entered Euro USD around 8 or past 8 o'clock GMT, probably 3 or 4 times, probably twice this year, actually. There's only been one other time apart from now. And the reason is because, of course, for us in the UK, the US session ends really at 8 o'clock. And so the liquidity becomes thin. The Euro session is already shut, and then the US session is shut. So there isn't much liquidity coming. And I know Chicago, I think, closes at 9. So that's the last of it. And then New Zealand takes over from 9 in UK time, and we carry on into Asia. But in this case, I knew that the price would take off long. It might take a little bit of time. The price was still struggling to take off long because when Euro USD is not an Asian pair, so the liquidity will be thin. And then we can see the prices rising. So I'm expecting this to continue as USD JPY is dropping. And as you can see already that the US dollar is weakened now. As I said yesterday, there's been a lot of negative news surrounding the US, and because of the pandemic, has only accelerated or exposed more where the US dollar is at in terms of the strength of the currency, you know, which is important. Now, I know that many people, the inflation has gone up to 4.2%. And we will discuss some things. I'm going to share the FOMC news in a moment and see where we're at with that and what that means for the future. Okay, so there is an aspect of fundamentals that are important. Don't be like some traders who, yeah, technicals is all you need, you know, and that's why their accounts are always blown. Okay, so we don't want to do that. We want to be, you know, the wise trader. You know, if you really want to make money, it's good. You have to be wise, being well informed. All right, but this is where we are anyway. Let's look at USD CHF. So USD CHF is also on a short now. Price is selling off quite strongly. I don't believe that this short will last forever. I do think that there is coming a reversal very soon. But for now, the price action is suggesting a short. And with the USD JPY short, now let's check the account to see. So you may not see this because on on MyFXBook, excuse me, takes a bit longer. But right now, we're just over 50% of the account again. And we're pushing towards about 55%. Okay, by the time this trade is probably done, the account should probably get to roughly around about 350, 360. So where we were a bit literally on the first day of trading when things were fantastically good. But I've learned my lesson, as I said yesterday. I'm going to make sure I focus. I'm setting time aside to make sure I trade this properly. And here we are right now. So these are the live results. So you guys can keep a tab on it and keep an eye on it. I think FX Street, or not FX Street, MyFXBook, sometimes it takes quite a while for it to refresh. So you may be seeing results from a bit far back. So it's okay. Here's the results. I always want to show you guys what's going on. But this is day 8, very simple day. If there are any other trades, then I will take it. Today's Thursday, so there is still great opportunity out there. Haven't seen any crypto trades right now. Bitcoin is just pulling back, but there's some great opportunities. Now for us on Hugo's Way, we have a fantastic opportunity to actually trade these cryptos quite well. All right. And so taking advantage of the Bitcoin crash that we've seen is one of the best things we can do right now. Now, I wouldn't say I would trade Bitcoin, but I am using Bitcoin to trade Ripple and Dash. I made some good profit on dash, and you can make quite a bit of profit. And you can also lose quite a bit if you're not too careful, because the small movements that you think are small are about 100 times as large as what it would be on Forex. So you gotta be wise here, guys. So if I go to my XRP before I head off to the news, let's see where XRP is. XRP, where are you? Probably further up because I've been trading it so much. Here we go. As I said, so XRP right now, as I speak, according to Hugo's Ways price feed, is $1.16. Let's call it that. Now the price dropped all the way down yesterday to a low of 81 cents. So one ripple was roughly for us about 50 or 50 45p for a few moments before the price spiked back up again. Now, personally, for me, I don't think the short is done. I think the short there's still some more shorting to do. And I'll be looking for some entries hopefully soon. The price has flipped an area that I was looking at. So if I go to the H4 here, and then I'll scale back up to the D1. On the H4 here on the 4-hour, if I scroll and put this right here, what I'm really looking for when it comes to the price action is for the price to, it's already touched back, broken beneath this very strong area of demand from last week, broken back beneath it, and we have a reaction that I'm looking for right here. So this reaction that we're looking for, I'm expecting a pullback very soon. Once it comes, we should be looking for a short moving forward. So I'm expecting the short to happen very soon. When that short happens, I'll be in it, and I'll be looking to ride this all the way back down for the next phase of short. If it breaks above, then we could see some recovery, but I'm just looking for this pullback here. And once we get this pullback, I believe we're going to go heavily short as the way that we would want to. So this is my plan of what I'm going for. And let's see what the price does with that. So if you see XRP on the account, just know that the trade took off well. Now the price really and truly already kind of pulled back. And the entry that I really wanted was anywhere from here. I hope it hasn't gone into the area that I wanted. Okay, it hasn't just yet. It's almost there. So I'm looking for the price to just spike slightly higher. I think I probably might set an alarm for this, that I don't miss this trade. So I'm putting an alarm here. And I'm expecting XRP to give us another short. There's a liquidity gap right down here that needs to be filled, roughly around about here. So I'm expecting the gap to really show off and show out and give us another drop here. But I'll use it in tandem with where we are with Bitcoin. So if I go to Bitcoin quickly, right now, there was this D1 demand zone, which was an important one, and I discussed it yesterday. And this D1 demand zone that we have going along here, the price has broken beneath it and seems to be going back above it. But it depends on how the close is. For me, my real area of what I was looking for with the prices, I was expecting a Bitcoin recovery. We entered into this area of high volume. So I expected the price to really push back up to about 47, 48. So if there is going to be a pushback and then a short, or maybe the price takes short now, then I'm looking for the next set of lows. Now, if you haven't watched the video, go and check out the video. I opened up another broker, which is, close to my heart. I love them a lot. This is not advertising. I'm just telling the truth. But with the broker I was using, IC Markets, the liquidity gaps all the way back down to 9,600 on Bitcoin. So, and I've always wondered now, again, as I said, IC Markets for now has never been wrong about their gaps, and they could be wrong this time. But every gap I've ever seen on any crypto pair has always been filled, including the Ripple ones. So in my mind, I'm just thinking to myself that possibly we could see another crash going on. The price hasn't got any reason not to go short at the moment. The narrative is still bearish short term. But for those of you who are crypto holders, don't be afraid. This is part of the game. All right, just buy more. Buy the dip. All right, but this is not financial advice. This is just my own opinion if I was you. Okay, but please go and see a financial advisor before you make any decisions. Okay, and definitely don't risk more money than you can put in. Again, for legal reasons, this is not financial advice. This is just purely for entertainment. All right, so I think we've discussed the account enough. Right now, the price is growing. Let's see USD JPY. What's going on with that? Still selling off as it should do. The price just returned into an intermediate supply zone along the way. Looks like the price just pulled back into here for a moment. Clean area of supply, and now it's selling off. So we should see some more sells. I might not even hold this for too long. Now, the easiest thing to do would be to target the next lows available. My real target really, guys, is back down here for these H4 lows right here and at this demand zone. So 108.311. So about, let's just call it 60 pips from where the price is right now. That's what I'm looking for. And if the price gives us more, then I'll look for a re-entry as the price breaks beneath this demand zone and continue selling. And I believe we should get a good short coming out of this. So I'm going to hold on to this trade. Let's see what happens. I guess my safe area to know what I'm going to do would be when the price breaks beneath here. So this demand zone, which triggered the long in the first place that we were trying to capture the short from at the beginning of this week. Once the price breaks beneath this 180.76 area, 760 area, then I'll be looking for a short. Now, this is not support and resistance. I don't trade support and resistance. These are all just algorithmic levels of price. So let's see what happens with this. I'm hoping for some good results. And let's actually take a look at what happened with the Federal Reserve, see what we had there, and see what the FOMC minutes were all about. Now, for me, I like to do my reading all the time. I always like to look at the minutes and what we have. The FOMC minutes are important because, as I said to you, the US dollar is the reserve currency for the world, was world reserve currency. So if you don't understand what's going on with the Federal Reserve, you actually don't actually, well, to a certain degree, you won't actually know what's going on with currency and the economy worldwide, okay? Because everything is linked together, all right? So it is important to always keep that in the back of your mind. Whenever you are looking at things, make sure you keep in mind on what's going on with the FOMC, all right? So saying this, let's have a quick look. Now, I'm not going to go through every aspect of what's going on because it's not necessary. The major things we do need are for us to look at what's going on with the outlook for the US dollar for the near future, as I said, near term or short term future of what's going on. All right. So I'm not going to go through all of this because there is a lot we could go through. All right. But the main things that we do want to go through, I'm going to scroll down here and show you. So let's scroll down. All right. So there are many things. For example, you know, for those of you who heard me discuss this, the OMO or open market operations, which is a Federal Reserve move. And every central bank has their own version of it. And open market operations or OMO is simply to be able to manage the value of currency, okay, through asset purchases, all right, and mainly treasury purchases. Now, the Federal Reserve have been doing some interesting OMO operations to keep the treasury bond yields at a certain level. Okay, so by controlling the supply and demand by buying and selling the treasuries, okay, so or what we call, it's not USDT, but we just call it T notes or UST, all right, so but not USDT, that's Tether. But anyway, what we want to look at is just how they, because we're in this overarching fundamentals, I like to call it, of the COVID-19 pandemic, most of what we'll be reading for the next 2 or 3 years will be how the world is recovering from this situation. That's really it. After that, things will go back to different narratives, but the main thing that we're looking at right now is what we have going on with COVID. So saying that, if we do a staff review of the economic situation, which is the main thing for me, now it says the COVID-19 pandemic and the measures undertaken to contain its spread continue to affect economic activities in the US and abroad. Information available at the time of the April 27th to 28th meeting suggested that the US real gross domestic product, or real GDP, had increased in the first quarter of 2021 at a pace that was faster than in the fourth quarter of last year, which already was signal growth. And you can understand that if you think about Q4 of last year, many countries were still in lockdown. The US had some easing, but in general, there were still things going on, a whole load of other issues. But when it comes to COVID, the pandemic was starting to recede. And so you really see the fruits of that in this first quarter, so January, February, and March. Now, when we have a look at this, continuing on as to what it says, the labor market conditions improved markedly in March. though employment remained well below its level at the start of 2020, which is understandable, okay? Many things have happened, guys, as you know. Now, the CPI or Consumer Price Index through February, as measured by the 12-month percentage change in the price index of personal consumption expect. Now, if you don't know what PCE is, I'll run it very quickly. So PCE is just a measure of how much the cost of price and goods, of goods and services has increased by, okay? And this is excluding food and energy. Now, the reason why it's excluding food and energy, just for those of you who are not too sure why, or if you see that on, sometimes it's actually shown on FX Street. The reason why is simply because food and energy have a constant demand because it is required for human life. And so even if the price of energy and food goes up dramatically, there will always be a constant demand because people need food to live and people need energy to live, okay, compared to other things. So this is why it's not included, because the volatility in price difference is too high. Okay, so if you factor that out, it's very much, well, it's a lot easier to be able to come up with a PCE figure and a CPI figure. Okay, so the total non-farm payrolls, and this is why NFPs, for some of you who just say, you know, NFPs are the craziest time of the news or US news, or one of the most craziest times, you'll see why in just a moment. So total non-farm payroll employment surged in March, with notable gain in leisure and in the hospitality sector. And as of March, payroll employment had retraced almost 2/3 of the loss seen at the onset of the pandemic, which is amazing. The unemployment rate declined to 6% in March, as a number of workers on temporary layoff continued to fall and the number of permanent layoff ticked down. Although the unemployment rates for African Americans and Hispanics fell, both rates remained well above the national average. In addition, the Asian unemployment rate moved up and was equal to the national rate, and employment to population ratio increased in March. Though both measures remained below their pre-pandemic levels, initial claims for unemployment insurance had moved down on net since mid-March, okay, which is important. All right, now, for those of you who know, in order for that money to come through to people, okay, to keep people going, all right, for us in the UK, we call it a dry roll, or we call it benefits, okay? So in order for benefits to happen, is based on a credit system, okay? And that's going to increase the supply of money. So this is what I'm really looking for. These figures, to me, in my mind, on what you should be thinking about is what's happened to the supply of money, the increase of money. As I said to you guys yesterday, think about, if you haven't watched that video, I would strongly advise to watch it. Is yesterday's video about the first review of the week. And I discussed the difference between 2008 and 2020. There are many massive differences in terms of the supply of money, which are very important. But for the sake of this video, we're just going to continue on and have a look and get to the main figures. So initial claims for unemployment insurance has moved down on net since mid-March and were at the lowest levels since the beginning of the pandemic, though they remained exceptionally higher than pre-pandemic standards, which is understandable, okay? Now, weekly estimates of private sector payrolls constructed by the Federal Reserve Board staff using data provided by the payroll processor ADP, all right? So if you've ever seen the ADP news, the ADP news is important, or the ADP data for employment as well. So some of these figures that you see on MyFXBook that you're seeing a high impact, and you're not too sure why, here's why, because these things are crucial things that we can use as measures to assess the health of the economy, okay? And so this is why we use them now, which were available through the first half of April, suggest that the rate and increase in the private employment had slowed somewhat relative to its earlier robust pace. Now, average hourly earnings for all employees rose 4.2% over 12 months ending in March, okay? The 12-month change in average hourly earnings continue to be influenced by the effects of the pandemic on the consumption of the workforce. In particular, concentration of job losses among lower wage workers since early last year and had resulted in large increases in the measure that were not indicative of a tight labor market or tight labor market conditions. However, before I move on, now inflation right now, okay, I don't know if you guys saw the news, about inflation. But right now, the US inflation is 4.2% as well. Now, if you think about it, if the average wage increase is 4.2% and inflation is 4.2%, then the workers haven't actually really gained anything, which is bearish for the US dollar. And this is why, the US dollar news is starting to really catch up with the bearish side of the US dollar news is starting to catch up with the price. All right. So imagine if you haven't just, if that went over your head out and you didn't see that 4.2%, let me just scroll back down here for you guys to see that. Here we go. So the average hourly earnings rose by 4.2%. So they're earning 4.2% more, but then inflation is 4.2%. All right. All right. So this is important for you to understand when it comes to how the price moves. All right. Now the inflation rate, okay, is 4.2 on average. Really is 4.16, but all right, if you did a deduction there, so 0.04% net, but inflation is the cost, how much the value of, it depends on what inflation you're talking about. But when you talk about core inflation, what we're discussing is, for example, if you print more money into the economy, that means you devalue the currency. So by the percentage you devalue the currency would equal to inflation. All right. So if the inflation of money or the buying power of your money has gone up, is 4.2% less, and then you're earning 4.2% more, you're not really, nothing's really going on there in the sector of growth. All right. So this is what the things you want to look for. So if you've been looking at the price, as the FOMC minutes have come out, you can see that the US dollar is still bearish at the moment. Okay. Now there may be news that may change that and things may come out which suggests otherwise, and that they're working to change that and bring that down. However, this is exactly where we are right now in terms of the price. And this is one of the biggest reasons why the US dollar is bearish at the moment. Okay. How long that's going to last for will depend on, how the central bank responds in the future, how the COVID pandemic recovery goes, and things of that nature. Okay. So the total PCE inflation was 1.6 over the 12-month period ending in February and continued to be held down by low rates of resource utilization. Okay. So PCE, as I said to you, minus food and energy is going to be the measure of the cost of goods and services. Now, if there's a low demand for it, then the price would not be that high, or it will stay quite cheap. And so this is why they've used the term here, low rates of resource utilization, which is important to keep in mind, okay? Now, core PCE price inflation, which includes changes in consumer energy prices and many food prices, as I just said, was 1.4%, okay, over the 12 months ending in February, while the trimmed mean of the 12-month PCE constructed by the Federal Reserve Bank of Dallas was 1.6. Okay, so with these figures that we have here moving forward, to break it down in a more simple term, we have a stable price, or quite a stable price when it comes to the price of goods and services at the moment in the US. Okay, now that stability, depending on what side of inflation you're standing on, may be a good thing or bad thing. Now, for example, with inflation, all right, if you're somebody who is holding securities that are denominated in a currency, okay, so if you're holding not the denomination itself, so not holding dollars or pounds or whatever, but you're holding, let's say, an asset or a stock that's worth a certain amount of dollars, if inflation increases, then it's a good thing for you, because it means it's going to cost more for your stock, which means the price is going to rise. Okay, so you earn more. Okay, but if you're on the other end, then you're holding cash and you're not holding assets, and this is why it's so important to make sure you understand what assets really mean in this world and why it's the most important thing you want to own. And it's not cash or figures in the bank, it's assets. If you want to know more about that, again, go and visit the Wealthy Show channel so that you can learn the things that have been put out there to support you guys. But anyway, if you're holding the actual currency and you've had inflation on that, then your buying power has gone down. So you're losing value, you're losing money without, even if nominally the value of the money has, or the number of notes you have hasn't changed. But if you're $100, for example, it's still $100 nominally, but then after the buying power goes down by 4%, then you can only buy $96 worth of things instead of $100. Now, I've never been to any shop where especially something, I don't know, like Tesco, if you have only £96, they're not going to give you the shopping that's worth £100. You need that extra 4. Okay, or you have to put some items back, embarrassingly. So this is why it's important now. 4.2% seems like small numbers, but on the larger scale of things, it is quite large. And so seeing that there's a stability there is important for us to understand, you know, what side of the market on and why we saw certain movements we did even across the crypto space. I do personally believe that, you know, because of stimulus and because of, you know, essentially, you know, a large supply of money coming to the public, not just to the private sector, but to the public sector, that money driven into the market, into the stock market, caused those massive pumps. And so if the money is pulled out, you know, or if you have an inflated system, it was always going to be a crash that was going to happen in crypto, in any other currency too. So summarizing, to get to the last point and what this means for the future, I'm going to scroll down here and look at the last part. So the economic outlook. Okay. Now, I'm going to start from this line here, and I have read through this already. This is why I can move around it. So I made it easy for you guys. I've already read through everything. Now we have the economic outlook here, which is important. And I'll say, guys, take some time, go to the Federal Reserve website and have a look. All right. And also read through all the way down until you get to the end here. And just check out the bullet points as to what their changes are going to be. All right. And you could check to see who's voted and who hasn't voted, but everybody's approved of this. So I'm just going to finish off with some last points here, and then we'll call it done. So I'm going to scroll back up here for you guys. And let's just look at what has been said here. All right. So the economic outlook, okay. If I start from the real, so if the US economic projection prepared by the staff for April FOMC meeting was slightly stronger than the March forecast, which is what they're saying. So real GDP growth was projected to post a substantial increase this year, which was a correspondingly rapid decline in the unemployment rate, as further reductions in social distancing and favorable financial conditions were expected to support growth. Now, if you're not too sure what the favorable financial conditions, interest rates have been at some of its lowest since 2001, when we had that sad event of 9/11. When 9/11 happened, the Federal Reserve acted quickly to cut the interest rates by quite a large degree. Okay, and as you know, if the Federal Reserve cuts its interest rates, central banks around the world, especially on the richer side of the world, if you want to call it that, so the Bank of England, Australia, New Zealand, follow suit. And so if you want to put it this way, the cost of money became cheaper, because if the interest rate is lower, it costs less to borrow more money, and you could leverage more cash and credit from the system to then be able to make you rich. So for the rich, it was a haven of opportunity. And we've had the same thing happen in 2020. For now, interest rates have stayed the same. But I think what we'll really see in terms of the US dollar, if we're going to see any gains on there, possibly, if the interest rates are increased by the Federal Reserve, I think right now it's 25 basis points or 0.25%. If that is to increase to 50, usually they're increased and decreased by scales of 25 base points. But sometimes there's differences. Like, for example, in the UK, we have a 0.1% interest rate. And the ECB, European Central Bank, they actually have a 0% interest rate. Okay. So these conditions, they're put in place whenever there's a financial crash to encourage spending, to encourage people to take out, to leverage more debt, to, spend more, and to refuel the economy. Okay. But anyway, looking at what we have here, this is very true. As I said, the race right now is the countries that recover from the pandemic the fastest will see the best economic growth. Okay. And other investors from around the world will be flocking to there because they're open for business. Let's put our money there to get it working for us. Okay. So with the boost to growth for continued reductions in social distancing, assuming to fade after 2021, GDP growth was expected to step down in 2020 and 2023, 2022 and 2023. However, with the monetary policy assumed to remain highly accommodative, the staff continue to anticipate the real GDP growth would outpace that of the potential over much of this period. leading to a decline in the unemployment rate to historically low levels, okay, which they were before. Now, the staff's outlook for inflation was broadly unchanged. The 12-month change in total and core PCE prices were expected to move about 2% in the coming months, as unusually low readings from the spring of 2020 dropped out of the calculation window, as a recent jump in the consumer energy prices pushed up the total measure, okay? And this is usually what happens in the commodity sectors. The demand for commodities has spiked massively, okay? So for oil, for gas, okay, as the world is opening up. And this is why, for example, the Canadian dollar, I have my eye on it as a very strong contender and I'm very bullish on that currency, and I expect it to continue, you know, for those same reasons as it being a commodity currency tied to oil. I'm expecting the Canadian dollar to get stronger. Now, all of these things I'm saying is information that is highly important because it gives you a stronger foundation to understand, or strong to when you're looking at price action, to know what to look for, you know, to follow on with what's going on in the price action and for the future of an economy. Okay, so in other words, now because we've had this massive jump in the total energy prices, which I expect to happen, which would happen, of course, is going to also balance out what we had going on with the unusually low readings that we had when the height of the pandemic was, you know, around. So core inflation was expected to ease some later in the year, but to remain above 2% at the end of 2021, boosted by large increases in import prices, okay, which would have happened, a recovery in prices that has been especially affected by the pandemic, and the temporary effects of the supply bottlenecks. Of course, supply bottlenecks, in other words, there was a shortage of supply sometimes. And if there's a shortage of supply, that will create some sort of scarcity, okay? And there'll be a huge demand for those products, and it will cost more. So with that being said, you can only imagine what's going to happen, that the prices will rise, you know, for certain things. So inflation was projected to dip slightly below 2% in 2022 as the influence of these transitionary factors diminished, which is the transitionary factors of the COVID pandemic, before returning to 2% by what they project to be 2023. So this is what we're looking at the moment. And this is supported by tight levels of resource utilization and in the labor and product markets, okay? So ending this off, the staff continue to judge that the risk to the baseline projection of economic activity was skewed to the downside, and that uncertainty around the forecast was elevated. Okay, this is a nice way of saying that they don't actually know what the future holds. They're still unsure about it. And I believe this is a bit bearish on the dollar, because that means that if they don't know what they're doing, then the rest of the central banks are kind of waiting on them to make their move to a certain degree. In particular, despite the demonstrated resilience of the economy to the surges in the pandemic over the last year, the possibility that COVID-19 variants that were more contagious or more resistant to existing vaccines will spread posed a salient downside risk. And this is the one reason why with this pandemic is a very interesting dynamic, okay? Because we're dealing with biology right now. And as you speaking today, again, you know what, from my heart, I'm very sorry for anyone affected by the COVID pandemic and recently what we've had with the Indian variant, which is very deadly, okay? And for that reason, because of this uncertainty here, which is out of their control completely, this is why there's not much they can say. And I said that we're going to see this narrative of COVID for quite a few years before things really clear up. Now, the staff continue to view the risks around the inflation projection as balanced. On the upside, bottlenecks, supply disruptions, as you know, as with what we saw with COVID, and historically high rates of resource utilization was seen as potential sources of greater than expected inflationary pressures, okay? This would push the price of things up, and inflationary pressures will be produced from that. Alternatively, the possibility that inflation will be held down by low underlying trend inflation and weaker than expected response to resource utilization was seen as an important downside risk, okay? So I want to say that one more time. This is an important point, and for those of you who trade oil, keep your mind on this. Alternatively, the possibility that inflation would be held down by low underlying trend inflation okay, and weaker than expected response to resource utilization or seen as a downside risk, okay? So weaker than expected. In other words, if the supply increases for things like oil as they're increasing, and then after another COVID situation happens and we have to kind of forcefully shut down things again, for example, then that will cause a problem, okay? Because now you have more supply and not as much demand, and which is going to affect prices, and it will put inflationary pressures in place that the central bank is not looking to do. Okay, so this is where we are. Now, there is a lot more. I'm going to leave a link to this in the description. I hope you guys enjoyed that breakdown. So this is where we are on the US dollar, and I say that we'll keep our eyes peeled on what's going on to have the best view that we can when it comes to price action for the future. Okay, so when it comes to what we're looking at for the future of the US dollar, it all really does depend on COVID to some certain degrees, and also to how the response of Federal Reserves are to this, news. So I think it's only right for me to end off here with looking at the dollar index before we leave here. So let's have a look at the dollar index and see what's going on. So I'm going to move up my charts, get some more space going on here. Let's have a look at what the price is doing over here on the dollar index. So quick technical analysis, as you can see that we still have some shorting. Now, for those of you who are not too sure what the dollar index is or what it does, the dollar index is quite a simple but powerful tool that you can use for confluence. With the dollar index, what it shows us is the strength of the dollar relative to a basket of currencies or the main currencies. So it is a weighted mean average of about 6 currencies. So we have the Swedish krona, the US dollar, we have the Japanese yen, we have the pound, we have the Swiss franc, and we have a few others. Now, this weighted average, so if the dollar index goes down, okay, in other words, what that means is that the dollar is weaker. When the dollar index goes up, then the dollar is stronger. Okay, this is simply what we have. And as we can see here, we have a very strong downtrend, but there is signs that the price may reverse. I'm looking at the price right here from a technical standpoint, and the price is within this area of demand right here. And this area of demand, this is where the price is holding. If we see a break beneath here, then we should see some continued bearish narrative going on the dollar. And I'm expecting the price, if it does do anything to go on the short side, then I'm expecting this low to be run here. And for the price to get to around about 88 or just beneath 80, just getting towards 87, moving forward. When you look at it from this angle on the monthly time frame, the bias is actually bearish since the height that we had here of 120 in 2001. And I guess it's probably going to be, it was very strong at this period of time, especially due to the fact that 9/11 had just happened and the interest rates were favorable and the economy at that time was very favorable. But we've seen a massive drop, and then we saw into 2014 this great rise here. So it's really up to right now this area from the monthly time frame is kind of like the last barrier before the price starts to short down. Now, the very strong rise up and the price may come back straight down to go forward. And if it does, in the midterm to long term, if the price is going to continue shorting, then we should see a very short bearish US dollar all the way back down to this 80 level right here, this 80 price point, which meaning that USD CHF, USD JPY, we should be seeing some short action going forward. But it all really does depend on here. We're actually in a critical area of demand, and there's not much to be said until we see what the price does in the weeks to come. It's also in a favorable area for the price to buy up and actually go long, but it'll be very interesting to see what happens here. Now, for now, if I go down to the H4, we had this interesting flip of demand right here, which lets me know the price is still in supply because we have reoptimization of demand for supply. In the last, probably in the previous day, 19th, we had the price spike into here around about 5 o'clock, and the price has shorted ever since. Now the movements have got quite small, but nonetheless, we can see the price is shorting. And if we look at something like USD JPY, where is it? You can see that USD JPY is following suit. So if you ever wanted to work out how this index works, you can just pair them together, go to the same time frame. Here's the dollar, all right, on the hourly time frame. And this is USD JPY on the, you can see they're not exactly perfect or the same, but you can roughly see they have the same shape and pattern. So you can use this as correlation to help you to understand where the US dollar is at to a certain degree, and it does have some helpful benefits. And I didn't use the dollar index to take the trades I did. In that case, it wasn't necessary to do. But watching here, we have a double bottom, which means there's a liquidity pool beneath here. So I'm expecting the price to get down to 89, which gives me confirmation that my short on USD JPY is most likely going to do what needs to be done. And, pairing up with that correlation, if we just end off here, if I go to Euro USD, so Euro USD is taking a while to take off, but it is moving long. And that's a good sign for me that the US dollar's bearish narrative for the moment is hanging in there. And I may still close because it looks like it's a quiet day today. For the prices right now, we're in the New York session and there's nothing much really going. It's quite dead. So I'm going to be watching to see what the price does later on today. And then after, we'll give another update. So I hope you guys enjoyed that. That was my take and my piece on the news and everything that we had. And I'll catch you guys in the next video. Make sure you guys like, subscribe, share, tell your friends. All right. Make some comments. All right. As of just starting out, you'll be hearing a lot from me and it can only get better from here. So be blessed, guys. Take care, and I'm out.